I think everybody knows either Matt or myself. I'm an attorney, Ron Rohde, and I'm with Matt Roberge of SLC Bookkeeping. So we're really excited to have you guys here today. This is a topic that Matt and I feel really, really passionate about. I mean, we're the type of people that get excited to read legal contracts. We get into the minutia. And if this is some part of your business that you don't like doing, you don't like looking at spreadsheets, you don't like categorizing things down to the penny, we are the types of people that you need to talk to, because we're going to help you figure out how to do this part of your business and avoid the pain, that the unpleasantness that comes with bookkeeping. In addition, we're going to talk a little bit about legal implications. I think that it's been presented to me a lot. I've helped a lot of my clients go through their PPP, EIDL loan, SBA, whatever it is. People had tons of questions about, is this a valid business expense? Was this a wages? What's salary? How do I handle this if I'm self-employed? What if I have a W-2? What if I'm paying dividends? I mean, all sorts of questions. When I was talking to my clients about how do they comply, what does this loan mean in relation to their other loans, you got to have your bookkeeping. You got to have that ready at your fingertips and be able to share that with your lawyer in order to take advantage. So that's what prompted our webinar today. I'm good friends with Matt, and I've worked with him personally for my law practice for over a year and a half now, and I really love their approach and how they do it. So I'm going to let Matt introduce yourself and tell people a little bit more about what you do.
Sure. Matt Roberge, founder, CEO, SLC Bookkeeping, founded in 2007. So been going at it for quite a while here. We do work nationally with small businesses around the US. Yeah, it's interesting. I think it's like Ron pointed out, it's one of those topics that you hear that word and you cringe as a business owner. You look at, and there's so many reasons for it. It can be intimidating for a lot of people. And we try and take that pain away by maintaining the books for people, bringing clarity to the financials, and really showing you how to use it more as a tool rather than a hindrance. I think a lot of business owners look at bookkeeping as a way to file taxes, but beyond that, a lot of people don't know the importance of it until they've had pain, but also how to use it as an asset, how to use it as a growth tool for your business. And I think there's a lot of opportunity and small steps you can take to, set yourself up to do so.
Yeah, absolutely. So, I think you kind of hinted on it. We'll also talk about this question, what is bookkeeping? Tell me, how is it a tool? How can I use it to help grow my business?
Yeah, for sure. And there's a couple of steps to get there, honestly. I think the reason that it's not a tool for a lot of people is a lot of times it's not updated. So that's kind of step one. Like my big trick, my big advice, and this doesn't have to be ongoing, but I did it today. I do it every day. I update 3 sets of books every morning over coffee. It's my normal day, every single day.
That was the secret right there.
That's it.
Check your books every day, everyone. 5 minutes, the webinar is over. That was the secret.
And no one will do it because it's boring and it's painful. And for the most part, a lot of people don't know how to do that. And a lot of the apps now, QuickBooks Online, Xero, etc., make it pretty easy. Now, using a service to do so will certainly help. But that's step one to getting set up to make it a growth tool. Because if you think about it, and I would assume this applies to a lot of people on the call, you probably look at it once a month, and it's probably mid to late in the month if you're lucky, where you're looking at last month's numbers. Now, hey, if that doesn't apply to you, that's great. That's where you want to be. Step two is then, you have it updated daily, and that doesn't do a lot off the bat until you've completed the other steps. But one of the more powerful things that gives me is actually a real daily cash balance. I truly never look at my online bank balance. I only look at QuickBooks because it has transactions that are posted in the future. My payroll, my rent, my mortgage, big expenses that are coming up that are going to affect the cash balance. So I treat my QuickBooks cash balance like that is the gospel. That is my true balance. I need to see what's coming in my cash, not where I'm at today. And then really the next step of what I do is, and we'll talk a lot about forecasting, is I create a forecast every single month at the end of the month for the next 3 months. I create an annual one, but if you've ever created an annual budget or forecast like a lot of people have, come this time, where you thought you'd be in July or performing in July or August isn't even close. Whether it's up or down, it doesn't matter. A lot of things change. I mean, this year was a great example of rapid change for a lot of people, where you have to keep that flexible and you have to use it as something that you're updating regularly. And I literally do all these things. I update the books every day. I look at my cash balance every day. I don't ever really look at a profit and loss, to tell you the truth. I look at a profit and loss versus forecast. So I'm looking at actual numbers versus where I expect it to be. And that's where you really start getting into this, what we talk about, a growth tool. That's kind of a piece of it. You're going to see a lot of different things. You're going to see, how are sales performing compared to where I thought I would be? Where am I over in expenses? Where am I under, and why, right? And so that's allowing you to now make better strategic decisions. At the end of this month, on July 31st, I will know exactly how July has performed. And a lot of people won't find that out for 5, maybe 10 days later. And then they'll react from there. Whereas I'm looking at it, I'm analyzing it compared to where I thought I would be. And then I'm forecasting the next couple of months so that I can say, okay, based on how we did, what are we going to use? What are we going to do with that information? Where do we need to make improvements? Are there opportunities in our number? Are there threats? Are there potential, like, are we spending too much in a certain area? And that's where we start getting strategic with like investments and how we're going to move the business forward through the books.
Right. And you're able to make those decisions much earlier, like on July 1st, instead of starting from the 15th, where the next month is already half over and you realize, oh crap, something happened in June. We can't react until 2 weeks later. That's the problem. You're allowing the problem to continue until you see it.
Yeah, we're building strategy at the end of the month and implementing on the 1st and then throughout the month. The other big thing I think it allows is for you to catch those problems or errors before you gets too late. Like if you're catching on the 15th, something that happened last month, and whether it be a customer didn't pay you or this major expense you forgot about, that's nice to know within a couple of days rather than a couple of weeks.
Yeah.
And also,
I would say, catching those types of errors, whether it's negligence of an employee or it can be intentional theft. And from the legal side, we see a lot of litigation and partner disputes and even bank lender disputes because of this type of issue. Where is the money? How is it classified? And again, if you're reacting to your own books, it can cost you thousands of dollars in legal fees if you're not aware of this problem, whether it's intentional, whether it's just sloppy. So yeah, go ahead.
Sure. No, I think it also just increases accuracy. I think that's another major thing, that a lot of people get their numbers, their reports from the accountant, and they don't know what it means. Number two, they're like, this isn't right, and so keeping up on it, although it's not sexy, it's not fun, right? Like it's not for you. I can understand that, but it will prove valuable. And over time, you can probably reduce that cadence from daily to either weekly or even monthly as you get more comfortable with where things are going. So, yeah.
Yeah, and I think, you touched on it, being able to make investments. For me as a business owner myself and looking to, take on staff or commit to a salary, it's really a hard question of when is enough? When do I need it? Do I have the base there? And I think that for me, I look back at 6 months ago and my revenue was there, but I didn't have the confidence that it would be there because I wasn't looking in it. And now, I'm able to expand. I've got a lot of different people working with me. but having confidence, it's not just enough that you know the number is there, but confidently saying, I have a 90% confidence interval that my revenue is going to be 50,000 next month, and 45,000 2 months from now, and at least 45,000 3 months from now. And if you have a 90% confidence, that's what I think really empowers change and allows business owners to take risks. Otherwise, you're just hoping, you're just praying that next month the bills get paid.
Sure. Yeah, I mean, that's a great point. Like, I like to talk about that as intentional investing, intentional strategy into the business. Meaning, I think especially when you're smaller and you're doing a lot, you can get really hung up on gut decisions. You can get stuck in that busy trap where you're just doing everything.
Yeah.
And your immediate gut is to go and say, I need to hire someone. I'm so busy. It's like, okay, well, I understand that. Let's look at that. Like, let's look at what that looks like, both from an expense standpoint and an income standpoint. One, can you afford to do so? Where's that money going to come from? Number two, is it going to benefit your business? You know, I think a lot of people look at this of building strategy and growing the business as just sales. Like, I'm going to get a marketing person to build this campaign for me. It's going to cost me $5,000. And I want to do that. And it's like, but why? Is it going to make you money? How much? How much do you want that to make you? And is it worth it? And sit down and analyze those investments into the business. Justify them to yourself. You might find yourself saying, okay, well, I do feel like I need to hire someone, but I can't do it right now. But 2 months from now, if I change X, Y, and Z in sales and expenses, then I can. And so I really like to analyze those, because people get very hung up on think about it. You probably talk to a ton of business owners. You ask someone how it's going in their business. What do they talk about? Sales.
Yeah, sales.
And number of people. I mean, it's great. Everything's going great. We did 2 million and I hired 5 more people. Oh, yeah. Cool. Like, awesome. That's great.
Margin, though? What do you
what's your profit margin? They have no clue. Did it go up or down from when you were smaller? And often it goes down. And it's heartbreaking to show them that numbers, and not say that's a bad thing, but to say, hey, just because you're growing top line revenue doesn't mean that your bottom line is going the same direction. And that can go very quickly in opposite directions. And that's something that if you take anything away, it's like refocusing on profitability. Percentages are huge. You know, common size data, which I can get into. It's something I love to talk about, of running your business through the percentages, meaning your main KPIs, like your 5 big hitters. What are they? And what percentage of income should they be? Because if you manage that, you can grow your business to whatever you want. You can grow top line. If you can keep your percentage of your big hitters, I don't know what they are for your business, but let's say for me, you know, certainly labor is a massive one that I need to keep an eye on, advertising, stuff like that. As long as I keep those percentages where they should be, and I'm managing the business that way, which is truly what I do. I mostly look at a profit and loss as a percentage of income. And if you stop, not so much ignoring the whole numbers, but focus a lot on the percentages and keeping those in the desired ranges, that can have a really positive effect on your business and your bottom line.
Yeah, absolutely. And one thing I'll kind of expand, you know, we talked about scaling your ledger to the right delineation, you know, not having 57 lines on a small business. You know, you need to scale it, because again, I'm coming from that QuickBooks Online, from FreshBooks. They give you a very generic general ledger, and it might have 50 line item entries for expenses. And that's just too much. I think for a lot of companies starting out, or in this, you know, more remote digital age, you don't have as many line item expenses. You're not going to have as much, you know, rent expenses, payroll taxes, payroll wages. And it's very easy for the automated systems to suck in expenses every other month into different wage categories. So yeah, you know, tell us a little bit more about scaling that. How do we start so that it's manageable?
Yeah, I mean, that's a great question, and something I often bring up, especially when I see new books. People sometimes advise and ask us how they should structure it, and I always answer it the same way. It is as simple as possible while being meaningful to you. In my experience, you give that to a CPA, they're going to structure it around the tax return. That doesn't really help you run the business and make business decisions. So, as an example, let's say someone says, should I break down my advertising into like Facebook, Google ads, all these different things, and then marketing? It's like, whoa, okay, like that, why? What is that? Is it helpful for you? Only if you're really tailoring it to the same, how you're driving your income. And so if you're tracking the income that way and you're tracking your expenses that way, then you can tell if you're getting ROI on that particular expense. So I like for people to keep it simple, but also meaningful, which can be difficult to define. But over time, as you are growing, we tell people keep it simple, but you will know, because you will get to a point in your business, we say, it'd be really helpful if I could see X per month. This would really help me because I could find out if I'm getting ROI on that. And then you build that out. We had talked a little bit about, if you are going to add all those details, I find that people add them the wrong way. And like you said, make it so big that it is meaningless. You run this profit and loss and it makes no sense. But at least using sub accounts off of the main accounts, as my example, advertising. If you do decide to break it down into Google ads, Facebook, whatever you're doing, make it a sub account so you can roll that up. You can collapse it down and look at your overall advertising spend and expand it out into the details, if that's going to help you.
Yep. And then, so once you do that, it allows, a new freedom, which is knowing your own goals. And that's another secret, is really setting your own goals for expense categories as a percentage of revenue. And then you can set targets. You can say, I need my labor to be 25% of my revenue, my variable labor cost 25%. I need my advertising to be no more than this. And it really starts to build on itself, where if you have your ledger set up, you have your categories that are meaningful, you can set some goals now for, either top line revenue. You can set goals for expenses. Do you find that it happens naturally, or?
Yeah, I would say that if you can get to the point of doing that, that is probably the best thing you could ever do for your business from a financial perspective, right? Is to get to the point where, in order to get there, first of all, you have to have books that are updated but accurate, right? And so, because if you start forecasting off of bad data, you're going to get a bad forecast, right? So you got to start there, and that's the simpler part. Now, building out a forecast, there's some science to it, but there's some gut too, and you got to combine them both. It can't just all be, well, sales has always grown by 10%, so it's going to grow by 10%. Well, what about that new advertising campaign you're going to do? What's that? Is that going to affect next month's sales? Probably in a good way. And so you got to have a little gut check there. And over time, I'm telling you, like, I'm at 99.2% accuracy on the forecast. Now that's the short range one, right? That my annual one, no, it's not that close. It's still not bad. It's probably 5% or less. But when you get to the point of building that every single month, and updating, like, so in June, I did July, August, September. At the end of July, I'll do August, September, October. You will be so accurate with it, I'm telling you, over time, where you will have confidence. And that's by running that actual versus forecast, you will gain confidence in your numbers. You will say, yeah, that is how August will be. And because of that, I am going to make that higher. I am going to invest that marketing campaign that I was going to do. You will get confidence that what you're looking at in the future is where you're going to be, and that will make you make much better business decisions.
And you get faster at it too, right? I mean, the first month or 3 months that you spend doing it, you're going to be sitting there plowing through and thinking about a lot of these numbers and what they mean. Month 4, you're going to say, this is old hat. You can crank it out, your monthly projections, in half an hour kind of thing.
Yeah,
So
I got to be honest. The investment into this of time, it's all about system design. It's about the system that you set up and how automated and accurate it is. That daily bookkeeping, like I truly have been doing that for I think 10 years, and it's my company, my wife's company, my personal books. It gets updated every single morning. Telling you, I don't think it's ever taken me more than 5 minutes a day to do 3 companies. It's usually like 2. It's usually very quick because it's all set up and designed the right way. That forecast typically takes me about an hour a month, I'd say. Maybe a little bit less because I've been doing it long. I know my business inside and out. And that's the other thing that really gets you to is like, you literally know your business, your numbers. Like that is a huge part of any successful business owner. A lot of people know that from experience, that once you truly know your numbers, it can be extremely powerful.
yeah, and I think again the numbers are very powerful, and more so it's kind of this approach of creating a business to sell it. You know, there's a great book, Built to Sell. I know we've kind of talked about that, but it's really just a general idea of set up your business with verifiable numbers so that somebody could buy it. Not necessarily because you do want to sell, but you could if you want to. And that's something that I think is so universal of the legal, the accounting, your marketing plans, the systems, putting all of that into writing and knowing your numbers as if you were building a company to sell it. That is a guiding thesis or vision for your company. So
that's for me, that's a golden rule of business. I mean, I learned that early on. I practice it. I believe in it. Like you said, whether or not you want to sell or not does not matter. If you build your business that way, that is huge on a lot of levels. It's super scalable.
Right? How many hours did you spend in the mountains this week? I mean, for people on this call, right? Matt runs a pretty large shop. He's got a lot of moving parts, but what do you make time for? I mean, every day, every week, it's.
Well, today, like I was up at 6. I got my coffee and did my books, and I was out the door and I biked for 30 miles and a couple hours on the river, and then I'm heading back up the river tonight to my other house, and it has much less reliable internet. So that's why I'm here. I'm in town today. But yeah, I honestly, I built my business around my passions of fly fishing and skiing and being outside. So I spend a lot of time doing that. And I learned a lot of the principles of the way that I operate my business through mentors, but specifically the Goldman Sachs 10,000 Small Businesses program was a huge game changer for my business in understanding it, how the right way to run a business is. And I believe your point of I know we talked a lot about exit planning, and that's a big part of bookkeeping. Like if you wait to do that planning and update your books when you need a loan, the PPP loan, or when you want to sell your business, that is not the way to do it. You do not build an exit plan when you're ready to sell.
Yeah, way too late. You're scrambling. And again, from the legal side, we do a lot of purchase and sell. We sell and buy a lot of businesses. And what do they always look for in the contract? The numbers. That is what drives everything for commercial real estate, for franchise businesses. They want to know, what are your numbers? And we're going to make adjustments based on the contract, adjustments based on our audited financials. And you can have the best marketing, you can say I've got this great team, I have the hardest workers, I've got the best location. None of that matters if you can't monetize it and track it and record it. Everything is based on verifying your books. So just think about it. Why do people who are buying or investing or loaning money put such a heavy emphasis? Maybe I would say they don't even look at the legal contracts as much. We review them, but people aren't doing huge adjustments on the strength of their legal obligations to vendors or to suppliers or customers.
Right.
They really just care about, well, what brought the cash in and what cash is going out.
And I don't know, I mean, thanks for bringing that up. That's a great point. I mean, I don't know if you've ever, I'm sure you've been through tons of acquisitions like that. But you're totally right. Like I don't know how many people have engaged in ever trying to buy a business. But if you engage with a broker, sign an NDA and get rolling on that, they don't even really ask you. One of the first things they send to you is kind of like the executive summary of the business and the numbers, right? Because that's at least the gateway to whether or not you're interested, right? The other stuff that you talked about is incredibly important. I know from looking at deals myself all the time, like I want to look at the numbers, see if one doesn't make sense, but I will ask about stuff like the team, the reputation, what's your strategy? What are the opportunities in this business? All those things do matter. However, the first thing you're going to get is the numbers, and they're going to say whether they're, are these audited or not? Are they good? And that's going to be the first thing that's going to trigger you as to like, I can't make this one run, or yeah, this is interesting. Let me go get a tour of this place. Let me meet the owner. Let me ask about the team. Let me look into the legal end of things. All of those things matter. There is nothing that's more important than the other in my eyes. They are all incredibly important, but right. Yes, you're right. Like, who has ever bought a business without looking at the numbers?
Yeah, absolutely. Well, again, I want to thank everybody for joining. I do want to respect the time. Matt and I, we can open it up for maybe just one or two questions, but otherwise I will record this and I'm going to, edit it up so much, and then I'll circulate it to everyone so you can have a copy of the video, be posted on my YouTube. I put all my webinars, LLC, contracts, employee contracts, those types of things on my YouTube channel. But do you guys have any questions?
If you've got them, throw them in the chat because you're all muted and we can unmute or read it. But I'll make it fun because I thought of one today, and I actually I did not run this by Ron, but I'm like, I was going to ask him this because it's a fun one. Yeah, I'm putting you on the spot. I know. All right. What is because I mean, who doesn't love having a lawyer that you can just ask a question to if it's not costing you money?
Advice,
It's usually so expensive to ask one question. So what is the one thing that no business owners, this might take you a second. What is the one thing that no business owner asks you that they should? Or very infrequently have?
Very infrequently. The one thing that business owners don't ask is really what should my goals be, in legal compliance. And what I mean by that is people really get caught up on LLC questions, or what contract should I use, or am I going to get sued? And in that sense, it's very it's asking the wrong question. They focus on things that they know, as opposed to coming to me and saying, what are the questions I should be asking, or what should I be worried about in terms of the practical impact to my company and my stress levels, right? Because I think a lot of what we do is manage risk, and it's kind of an obtuse thing. So if you have a lawyer review the contract, they make the changes, I can't guarantee you that the other side isn't going to sue you. But if that trade-off, the risk reward, makes sense, and you can sleep at night knowing that you're as protected as you want to be in terms of your legal investment, that's what I provide. And I think a lot of clients don't realize that that's what I'm providing. I'm providing a peace of mind that the contract is going to protect you as much as it can. But it's not 100%. And it's different because a lot of clients, they just say, Ron, can you review this? And I say, yes. What am I reviewing it for? It's a spectrum. I'll have a publicly traded company on this end that I know what their standards are. They want this clause. They got to change this venue. They don't agree to these accounting terms, blah, blah, all down the road. They say, review it and bring it to our standards. And I get other people that say, well, I just want you to review it to see if it's fair to me. And I say, well, I don't know what's fair if you expected net 15 payment and the contract says net 90. I love to see those, some of those big companies have net 90 payment terms. And for some small businesses, that's unworkable. That kills their cash flow. And Yeah, so that's
Nice.
my answer to that.
Thanks. And I honestly, to everyone, I literally thought of that question because I'm like, well, if no one has any questions, I'll ask them one. I was riding my bike and I thought of it. It's funny because I was thinking, I'm like, well, what's my answer? It's very similar. Everyone comes to me and says, here's what I have. And it's like, here's how I do it. But they don't ever ask, how would you do it? Because if you engaged with me early and like, I have this restaurant or this, how should I set this up? Like what systems, what software and systems should I use? I would design you the nicest system ever that was so automated and worked so beautifully, but I'm often just given this, stratosphere of stuff, of software and, contract systems they use. And here's how we get the payment and all this. And it's like, none of this works together. And they're not flexible to it. So the clients that come in there are like, well, this is how we've done it, but we're open to suggestions or change are the best ever. Because
Yep.
it's like, yeah, this is how you do you collect the payments. This is the payroll provider I would use. And here's why. Because the answer to those questions isn't always the same. I would ask some questions.
It depends on where are you as a business now? What are your goals? And also, what are your goals going to be in 3 years, in 5 years? Because I want to give you legal advice that's going to set you up for the next 3 to 5 years, not just where you are now. Where do you want to be and where do you see the company? Because those contracts are still going to be in effect. Same with the bookkeeping. The systems that you invest in now should work. They should absolutely work today, but then they need to work 3 and 5 years down the road. So again, thank you everybody for joining. I really appreciate everyone who signed up. I'll circulate the video and you have our emails, so feel free to reach out if you guys have any questions. But other than that, I think we'll be
Someone did ask one. Sorry, they put in the Q&A. Sorry.
the
They said they discuss avoiding PPP EIDL legal repercussions due to inaccurate bookkeeping. So how do you properly account for this money? Well, okay. Do you want to do that, or do you? I'll give you my 2 cents, and then it will be very quick. So for one, everyone's asked, how do you apply for forgiveness? How do you do this? How do you track this? And people have set up so many different systems. Honestly, it's going to change again. Okay, that's my best advice to you. And I think it's going to change to be very beneficial for almost everybody. So to avoid the legal repercussions of it, I think it's going to be fairly simple. This comes down to good bookkeeping. I've seen a lot of people do some crazy stuff here, and some was forced down their throat by the bank, like set up this separate PPP checking account. All that to me was completely unnecessary. This is very cut and dry, like certain expenses are going to qualify for forgiveness and certain ones are not. So just like in anything else, like how do I avoid an audit? How do I, like if I do get audited, how do I avoid getting penalized for it? It's just good, accurate bookkeeping. That's all this is. Because there's gonna be certain categories that are going to work for forgiveness and some won't. And so if you lump those in and your bookkeeper puts them in the wrong category and you put it in for forgiveness, I guarantee you the bank is going to push it through. And then you might be on the hook for it because just like in anything else, you reported it inaccurately. So I guess my short answer there, and I'll let Ron put his 2 cents in, is like, this is just needs to be solid, good coding. That's all this is on the PPP stuff. The EIDL, I don't know as much about. To me, that's just a loan. And there's a lot of like ins and outs with the advance coming off of the PPP. But the EIDL is truly just a loan. And I understand that it's very confusing. It's also that this is new. This was very fast. And all of this will come to light eventually once they make it all clear. And you have a ton of time on the forgiveness. Don't rush on the forgiveness. You have so much time. It's like 10 months or 12 months, whatever it is. Like my advice is sit tight. The next couple of months are going to be a critical time. Like Congress is working on kind of the forgiveness changes right now. And I expect a lot of answers before the August recess personally.
Yeah, I would just echo that. The key areas of enforcement that we've seen have been on the application side. So if you make a fraudulent misrepresentation, and again, the cases that they've seen that they've really turned on you cannot grossly misrepresent the size of your business or whether a business existed prior to the date or not. Those are some of the areas that they easily go after. That said, everything else in the phrase of the loan documents has generous legal provisions. You know, you're not going to get dinged for miscoding as a criminal prosecution, right? That's to me is the risk. Some people are very concerned that if they do a miscoding, is there a criminal? Is it a false statement? Is it a fraudulent statement to the federal government? On the initial application, yes, you know, if it was fraudulently reported and misrepresented. For now, on the forgiveness side, you can take your time, but the loan language is not such that it gives you enough notice that you'd be subject to criminal for this after effect. So, you know, it is important because you have a civil penalty. So that's how I would say it's really just you have your own money at loss. It's not legal repercussions of penalties or interest, you know, other than just non-forgiveness. So
someone popped another one in here
another
too. So yeah, I agree with everything you said there. I think that they're going to be, you know, just go back to running your business and don't do anything you wouldn't do then, and you should be fine. Don't do anything illegal. Okay. There is insurance available for the liability of not being granted forgiveness. The caveat is that there must be a 50% or greater likelihood of forgiveness for that business. It would cover civil penalties, but of course not criminal or fraud. Corbin said that. I don't know, Ron, I'll kind of leave that to you. There's insurance available for the liability.
Yeah.
I'm not being granted.
I mean, that's the first I've heard of it, but I definitely think it would be up to their own underwriting standards. I'm happy to look into that, Corbin, and follow up, you know, on how they calculate. But that sounds like a private product based on their own underwriting, and then they're going to charge you a premium based on their perceived risk. I mean, nothing too complicated about it. It's a private product for their own underwriting, and if they don't think you're a risk, they'll offer you a lower premium. Yeah, it's
my best advice on the PPP so far has just been sit tight. Like it's gonna change, and I think that it's gonna be a lot more lenient than they originally perceived it to be, which was already quite lenient. And
yeah, I heard some rumors, you know, waiving anything under like 250K and below, just doing a straight forgiveness because it's too complicated to try to enforce it on that number.
Too expensive for everybody. Yeah.
Yep. So they make all loans under a certain balance. So.
Corbin re-commented that is exactly correct, similar to a tax liability insurance product. So
okay. Yeah. Well, cool. That's the first I've heard. So again, thank you guys so much for joining. We love doing this, and again, if you have any follow-up questions, reach out to us individually. But other than that, have a good afternoon, and we'll be in touch.
Thank you, guys.